Hi, welcome to my full strategy video. I'm going to do this in parts and keep the videos short and sweet, but this is a reference to how I am searching for the optimal trading time frames and patterns and the entry techniques that we need to use. So I'm going to start with an outside in approach. So we're going to scan from the higher time frame to the lower time frame. And we're looking for trend range patterns using trend lines, which could be across for ranges or up or down for up and down trends. We're looking at trend line breaks, removal of supply and demand, and these patterns to give flip zones, and that will give us also the direction we're going in and also profit margin. So we're using the higher time frame that we want to trade. So if we're looking to be in a trade for a day, or day or two or the week, we need to use the daily as our higher time frame. Now, if I am trading anything below the monthly, I will always start and move up to the monthly to also look for profit margin. So basically, we want to start with the monthly and scan down, even if we're trading a 60-minute, a daily, a 240, or even a 15-minute for a scalp. We need to always start from the outside in. We want to get our ducks in a row for the best possible confirmation trades where the market will move, but you need to have a higher time frame and a lower time frame, which brings me on to rule 2. Only trade the lower time frame with the higher time frame. So as an example, if the monthly, weekly and daily is up and the 60-minute is down, we can only trade the lower time frames below the 60-minute down, or wait for the 60-minute to be in sync with the 240 daily, weekly and monthly, and then we trade the lower time frames up. So as an example, if the higher time frame is your daily and we're in an uptrend and the lower time frame is a 60, we want it to be in an uptrend or breaking the trend line to reveal a change in the direction of the uptrend, creating a flip zone as above. So we're using basically the outside in scan on every time frame, inside out on every time frame, but we need to combine them. We need to understand it. Now, the daily may have a 240 or 60 or even a 30-minute trend. It doesn't matter. We're using the trend lines for the structure. So if we're using a daily and a low time frame 60, we then turn the 60 to our higher time frame. You want to make sure that the lower time frame might be the 5-minute. We want that to be in sync with the 60. So the daily's up, we want the 60 up, we want the 60 to be up, we want the 5 minutes to be up, we want the 5 minutes to be up, we want the 1 minute. And then we can even drop down to the candlestick itself on the 1 minute, not the structure, but the candlestick itself for an entry. So we're reducing the risk as low as possible and using the timing of reducing down, breaking trend lines or in sync with trend lines and so forth, which I'll show in the video. Then we're doing the inside out scan. So once we got it, I'm looking for the entry in the 1 minute or the 5 minute, then back to the 1 minute and so forth. Or it might be the 60-minute and I'm looking for the 5 minute, then I go back to the 1 minute. So if I take some losses, the idea is waiting for the setup on the time frame above to be in sync and then using the lower time frame like the 1 minute to get an entry. So this way we can take multiple small losses and hold on to big winners. The inside out scan is waiting for the lower time frame to be in sync, which I just said, and then we're looking for break, which I just said, and close of trend lines, which is a fixed rule, but the removal of supply and demand on the lower time frame from the inside out is discretional. From the outside in is probably more important, but it's always discretional with removal of the supply and demand, and this is the only pattern that you actually need. So what is the pattern? Let's go into the chart. Here's an example. We're going to use the monthly, we can use the weekly, the daily, the 240, the 60 and a 15-minute just as an example, and we can go right down to the 1 minute. I made a video on this, which Yazips, I'll show you just what I was looking for to take this trade to short the market here. Basically, look at the monthly. We've broken the trend line. We removed this demand area here. We've got supply and control. What we've got to do is wait to be in sync. How do we do that? We drop down. Let's have a look at the weekly first of all. Definitely a break of trend line here. So we know that this is confirming a snapshot, X-ray snapshot of this monthly, but we don't have a supply level. So what's going on here? Why have I got this level marked off? Where we have a break of the trend line over here, we have got all these supply levels. We've got even from here, supply level, because we've not created any structure up and down. No trend line can be drawn on this weekly at all. We've only got this one, that's the break. There is a level here where market's already turned. We're back into that level. So why am I drawing this? I'm looking at pivot points, because when you think about this way, which I'm not put on the notes here, but I'm going to show you the pivot points. When we've got a uptrend, if you look at the pivot low, it's never broken. Pivot low, never broken. Pivot low, never broken. There's a pivot low here, is broken. Then we've got pivot highs, never broken. Never until here. Pivot low is broken. We've got pivot high is broken. Sorry, pivot low is in control. So that's how I look at it. So the pivot low here is technically in control. But now, which side of the break of the trend line is? This is where it gets a little bit advanced and a little bit tricky. The break is on the downside. So anything where above the trend line here, I want to be looking at the pivot lows. And this was an early sign and removal of this, that something was changing, but it's the pivot lows that was in control and something was changing here. That's why the trend line broke. So let's have a look on the down. And now we're downtrend. Here's the pivot high. Should be looking for shorts to continue. Another pivot high here. And it's got to account. So now we have pivot lows in control. But we are under the trend line. And this could technically carry on rallying up to this upper level. There's nothing wrong with that continuing to rally, but if I'm under, I'm focusing on the pivot highs. If I'm above, I'm looking at the pivot lows. So if we created a new pivot low, which we did here, that would still be a buy opportunity. Yeah, no worries, darling. That's the buy opportunity. So now, once price has broken that pivot low, then we know we're continuing a bit lower. So exactly the same here. We have a pivot high. It is just above the trend line, but the trend line is broken. So we're looking at supply to short. So now I'm looking at the pivot highs as my cutoff point. So I want to be shorting anything under this pivot high. So I've mapped that off. It's like a hidden supply, pivot supply. So with that, if we look at the daily, we can now X-ray snapshot of the weekly and also where we are on the monthly. It is the pattern on the daily. Whatever's happening on this uptrend is dictating the candlesticks on that monthly. And we had a change when price dropped and broke. This was my flip zone, my first area to look to short. If we come to the 240, it was this big move up. And you can see there was a pivot here, which is technically going against this big move up, but we're in this area. So I'm looking for some break of what was going on in this move up. And the break was on the 60. It was moving up here. There was a stop and then I entered again. And this is what was happening down here. And then eventually price moved higher. So therefore I no longer start shorting inside this level. I then draw the uptrend line here, which cannot really be drawn on the 240, so we're looking at the daily in the 60, and then when price rallied into this level, this was broken, which now produced, and if you look, this is actually a demand level which was actually removed after price bounced from that level. But this is the level up here that I would be taking the first gamble, and this is a level, and then price has started to drop in, and we're now producing initially a trend line like this. But we are in sync. We are now in sync with the monthly direction. We're bouncing from the weekly pivot. We're actually bouncing from a double top, not a head and shoulders, which this would have been kind of like a head and shoulders. If price would have bounced from here, it's a double top. So I was looking only for shorts once the trend line was broken. And if we was to come down onto a 15 up in that area, and we was to do this, which is that 60-minute trend line. So to be in sync, we need to remove that trend line, and I need to remove some form of demand on this level. You see price was moving up. There is a small demand here. Once demand was removed, supply comes in control. This is the kind of the head and shoulders supply in here, or we have the double top. And there's even the very extreme here, but we need to make sure if we push into that area right up here, that I need to have a break of a new trend line. So this rally, even here, this rally, the real break on a lower time frame was in that area. So if you're watching the move up, once we are below that, and you can see there is an actual gap. So then I was only looking to short the market. And then all we're looking for is any structure, which this would be on a 5-minute, break a structure, short the market. Here, And we're looking for higher highs right here. So if we look at this, again, we're all in sync. We know we're shorting. Everything is in sync on the higher time frames now. Here's supply level. This was a nice pullback to short the market. So the stops need to be above, ideally, these highs. So if we break this, the stop needs to be above this high. If we rally higher, we need to wait for the break before the stop would be up here. But you can see that the supply is actually taking control, so we know we want to be shorting. We don't want to be waiting for price to rally up and get into any of these levels if we're going to start to break that. So this is what we've got at the moment, and you can see now we've got an A, B, E. Price is bouncing. I've already took trades on this. I'll show you Yazips, but we've got supply and control, supply and control. If we want to wait for any of these moves up on 1 minute, including these moves up, a break, a break, a break, stops above the highs, that tells us where the stop should be. There's even a small one here, but then price rallied higher, but we're under the trend line, so we'll be looking at the ABE, waiting for a break here and in for the short. So my bias is short. So it's the break of the trend lines giving the direction, and here we have now. If we start to rally above this, we're above the trend line, I'm going to cease trade in the shorts until we rally higher and make a lower low. And why is that? Because we need to then extend the trend line. There is also indication here that if we rally up to this area, there might be an ABE, because this is the overall big trend line. So if price was to kind of rally up into that area, it will open up some profit margin. But what I would wait is for the structure to be in sync. Because what's happened on the 60, we are breaking the levels. We need to rally up on the 60, or whatever structure is up on that, to be in sync. Because this is the structure down. We need some structure up so that we know that the 60 or whatever that strong move up is, because if we've not produced any pivots, we need to drill down a time frame. If we produce pivot lows, we need to draw a trend line up like this, and then once we're below that trend line, we are then looking to short the market again. As long as we're under this, if we start to take this upper trend line out, we need big structure change. So that means we need to let price dictate which direction we're going. We need to let that happen. Timing, which is in my previous videos, it is an illusion. We do not need it if we understand this breaks of structure and the trend direction. So we want everything to be in sync. So if price rallies here, the daily is still in sync. Even the 240 is in sync if we've got nice candles. We just need a break of that trend line. Even if we did happen to rally a bit higher, there is a chance that we can still short the market. If you stopped, it's fine. We sit back, we wait, we know where the stop is in the right place. Therefore, we know the markets are changing. Let's stay out the markets. They could be ranging. Let's let the market dictate. We are only following the market direction. And we're drilling down to the low time frames to get in the trade, which let me bring you down to for this 5 minute. And we'll look at a 1 minute. So if you look at these moves up, break a structure, when price come up into that area, there was a breaker structure there. There's a little 1 minute supply. Look, we see they've got the low. Price reacted from it. Look at the breaker structure here. Supply. Let's look at this breaker structure here. Supply. Price bounced from it. But we would wait for a breaker structure again here. Breaker structure here. Supply. Breaker structure. This is supply, but price is already dropping here. So if we were to look at the intermediate sort of time frame between the high and the low, once we break here, we need to wait. Break a structure. And what is in control? Supply. So this is the idea, is fuck the news. News is good to stay out of the markets when it becomes volatile, okay? But really, if you're in the trade, you might get some slippage. Take the gamble. You're not going to risk 1 or 2%. You want to be risking 0.1, 0.2, 0.5. So it's fine. Because if the news is in your direction, you're going to have a fucking huge plummet, instant profit of 20, 30, 50 to 1. So news really is irrelevant, but we do want to keep an eye on. So just looking at that break there, there's more there. You can see prices tried to come up to this sort of supply, not really made it and dropped. But yeah, so if news is there, we can use that if we want to. If we don't have a really good entry, it's too big or too tight or whatever, we can decide to stay out and just basically monitor that. But news fuels the direction. So that is pretty much my strategy in a nutshell from the inside out. And I'm going to keep it really simple, and that is how we are going to become millionaires.